Hey everyone, now that we have completed Q4 result season, I thought of discussing companies that have posted blockbuster numbers. But before we proceed further, let me clarify that this is just the first step. Next, we need to deep dive further to understand the business model of the company, future growth potential, valuation and so on. Having said this is a great exercise in terms of identifying companies that have posted great number and looking promising. So this is the part 1 of the video. I've divided this video in 2 parts. So let's get started. First is the electronics sector. Now, electronics has been one of the fastest growing sector in the country since last 3-4 years because of government push towards manufacturing. Now, I remember covering this sector long back where I discussed the entire sector and of course the top companies in this space, and I've also done individual videos. So if you look at the first company with blockbuster number, it's Dixon Technology. Look at the sales, EBITDA, net profit, absolutely fantastic numbers. Having said this, the only challenge in my opinion is that the valuations are more than 100, which in my opinion is on the higher side. Yes, there is fantastic growth potential, but then the challenge is a majority of near-term good news is already priced into the current valuation. Currently, it commands a market cap of 90,000 crore and trading at a price multiple of around 14,800. Now, of course, there's a lot of potential in the company, but then in the near term, I identified that there is one challenge where there is going to be absence of PLI benefit for mobile phones manufacturing from Fy27. So it would be interesting to see how Dixon cope up with this. Although management has mentioned that they are focusing on export and a lot of other things to offset against this PLI benefit loss. But still, this is one thing that you need to keep in mind. And like I said, this is growing at a very fast rate, but the only catch is valuations are on the higher side. Moving on to the second company that has posted another fantastic number, and that is your Dixon Technology. Again, a very fast growing company in the space where sales, EBITDA, net profit all growing at a very fast rate. In fact, Dixon's management has continued to give fantastic guidance for FY26 also, where they are saying that they will grow at minimum 60% rate and they are trying to achieve a target of 4,350 crore or so. Right, so looking very good for FY26 as well. But again, only one catch, valuations have already factored in majority of near-term news where PE is trading at 125, right? The next company in the electronic sector that has posted fantastic number is your Avalon Technology, be it sales, EBITDA, net profit, everything great. Having said this, for FY26, management has guided for revenue growth of 18 to 20%. By the way, you can go through company's con call and you can get all these details. Now, if you look at the growth, it is 18 to 20%, but against that, it is trading at a PE of 90, which again looks on the higher side. Then the fourth company in electronic space with fantastic number is PG Electrolast, be it sales, EBITDA, net profit, fantastic growth. Now, management of this company has guided for 33% growth in top line for FY26, right? And if you look at the current valuation, it is trading at a PE of 76. So relatively, the valuation is on lower side as compared to other companies in electronic space. But then, is it worth paying a PE of 76 for a company that has guided for 33% kind of growth? Now, you take a call whether you are comfortable or not. But yes, net, all these 4 companies are fast growing company. The only catch is that majority of good news is priced in where valuations are elevated for this electronic sector at the moment. Also, one thing I want to clarify that when you look at the guidance, you have to also track the result, because sometimes management, what they do is they overpromise and underdeliver. So you need to make sure that management is able to live up to their guidance. Moving on to the second sector that has posted fantastic number is affordable housing. Now, if you look at the company in this space, first is India Shelter, where if you look at the AUM, it has grown at 35% year on year, disbursement has grown 25% year on year, PAT is up 39% year on year. And if you look at other KPIs like ROA, ROE, then NPA, all of them are looking very good. Next, if you look at the guidance, management has guided for kind of 30 to 35% growth in loan book AUM, and they are targeting 30,000 crore AUM by March 2030. Right, so there's a lot of growth potential ahead for India Shelter also. And if you look at the branch addition, they're trying to add 40 to 45 branches for FY26. As far as valuations are concerned, India Shelter is currently trading at a price to book of 3.5, which is a decent valuation. Next, if you look at another company in the space that has posted blockbuster number, it's Home First Finance, where the AUM has grown by 31% year on year. Disbursement is slightly on the lower side at 15%, but otherwise if you look at the PAT growth, it's 25% growth year on year, and all the other parameters like ROA, then ROE, then NPA, all of them are looking good. As far as valuation is concerned, Home First is trading at price to book of 4.6, which is slightly on the high side, but I think that your affordable housing finance sector is looking very, very promising, and with the RBI rate cut and the liquidity infusion, I think NBFC sector, and particularly within that, I think affordable housing has got very bright future. As far as guidance is concerned, Home First management has guided for 20,000 crore of AUM for FY27, which means approximately around 25% kind of growth in AUM for the next couple of years. And if you look at the longer term guidance for FY30, they are guiding for 35,000 crore of AUM, which again translate to around 23 to 25% CAGR growth in AUM that they are expecting. So again, the numbers are good and the guidance is good. Valuations are reasonable for both India Shelter and Home First. By the way, I've recently done a video on affordable housing finance sector. I've been tracking this sector very closely. So if you haven't watched this video, do watch it. Then moving on, if you are a long-term investor and if you do not get enough time for research, or if you need some guidance, you can also explore my weekly video series that include one exclusive video every week. In this video, first I share my own investment strategy that helps you understand which stocks to buy, what is the thought process behind that selection. Also, I track more than 200 quarterly results and I also share my commentary on that. Right, so that really helps in building that conviction and confidence before investing. So you can explore my website or you can also explore the join button on this channel. Moving on to the third sector with blockbuster number, that's your tech companies. Within that, first company is Zaggle Prepaid. You look at the sales, EBITDA, net profit, all fantastic. By the way, I've recently discussed this company as well on my YouTube channel. The good thing is, if you look at the guidance is also fantastic. So for FY26, management has guided for revenue in the range of 35 to 40%. And if you look at the EBITDA, for FY25, the guidance was between 9 to 10%. And they are saying that they want to increase their guidance for next year, which is 10 to 11%. So 35 to 40% growth in revenue and increase in EBITDA, which will result in even higher profits. That's where I think Zaggle is looking very promising. And if you look at the valuation, it is trading at a PE of 60-66. Now the kind of growth company is showing, I think the valuations are still not that bad, right? So that can be considered. Please watch it if you haven't watched it. If you want to understand the business, do check my YouTube video on Zaggle. Next company is Ceinsys Tech. Again, a very interesting company in tech space where the sales, EBITDA, net profit, all fantastic. And if you look at the guidance also, management although has not given any futuristic number but they are saying that they're expecting substantial growth in the FY26. As far as valuation is concerned, it is trading at a PE of 40-41, and for a high growth company, these valuations are not bad. Having said this, please make sure that you deep dive into each company before taking a call on investment. Do not blindly invest based on just Q4 numbers, because you need to understand the future guidance and then understand what is the potential in the company. Moving on to the next company in the space, it is your CE Infosystem, which is MapMyIndia, which has posted fantastic number across sales, EBITDA and net profit, currently trading at a P ratio of 70. And if you look at the guidance also, management is saying that they want to grow at 30% CAGR rate for the next coming years. If company can grow at this rate, I think even at PE of 70, although valuations I believe are slightly elevated, but I think there's more growth potential. Currently trading at a market cap of around 10,000 crore. If you recall, there was an incident where management of MapMyIndia, Mr. Rohan Verma decided to step down, but then there were a lot of controversy that happened, and again I think he has reverted that decision. So MapMyIndia is again one very promising company, but then I remember discussing this when that entire development happened where Rohan Verma decided to step down. So if you haven't watched that video, do check it out. Moving on to the next company in tech domain that is growing at a very fast rate, it is your Netweb Technology. Again, this is one company I've discussed in detail on my channel. Look at the sales, EBITDA, net profit, fantastic. What is the catch? Valuations are at PE of 97. Having said this, again, Netweb has given very good guidance where management is expecting 35 to 40% CAGR growth in top line over the next couple of years, which means approximately next 2 year company is guiding to double its revenue right? And EBITDA, I think they've kept it at the similar range of 13 to 14%. So again, a high growth company in the tech domain space. Also, one of the key beneficiary of this revolution in data center, right? Moving on to the next sector where company has posted fantastic number. This is your pharma, and within that, first company is Electrolast Chemical. I'm not sure how many of you are aware, but this is the new name of Army Organics. If you look at the sales, EBITDA, net profit, all fantastic. Currently trading at a market cap of around 10,000 crore. As far as guidance is concerned, management is saying that they anticipate robust growth with 25% kind of growth in Fy26. So that's a decent growth expectation. Currently, Army Organics or Electrolast is trading at a P of around 58, 59, which is on the higher side in terms of valuation. But then for a high growth company like Army, it can be, obviously it will command a premium. So you need to decide whether you are comfortable paying this kind of premium to Army Organics or not. Having said this, I think the growth is fantastic and Army has got a very solid model. Again, I've done a detailed video on Army Organics couple of times in the past. Moving on to the next company, which is Laurus Lab. And again, Laurus Lab has underperformed for a long time, but management always guided that FY25 is going to be much better, especially Q3 and Q4. And management is able to live up to their guidance. Although the sales are just 19% up, but look at the EBITDA and net profit. The reason is because Laurus Lab has been consistently investing in the capex, right? And now that the capex has reduced, I think now the EBITDA is looking better, net profit is looking better. Obviously, now today, if you look at the PE, it is looking very high, but then the investment that Laurus Lab has done today, it will be reflected in the net profit in the coming quarters and years, and hopefully then the PE ratio would fall. As far as guidance for FY26 is concerned, management has not provided any specific guidance, right? So that is one catch. We are not able to gauge what is the growth that Laurus Lab can see in FY26. Moving on to the next sector, which is looking very promising and posted fantastic number, it's your co-working space. I'm not sure how many of you have seen, but I've already done a detailed video on this co-working space covering AWFIS and EFC. Both companies have posted fantastic number. I have clearly explained in detail what is the difference between two companies, the entire business model of co-working space. So if you look at AWFIS, look at the sales, EBITDA, net profit. Of course, the base was very small, but still company is a fast growing company. Market cap is around 5,000 crore. Again, P is obviously on the higher side at 114, but I think kind of growth company is showing. It's looking very interesting. As far as FY26 is concerned, management is guiding to add around 40,000 seat, right? And they're expecting to hit around 80 to 85% occupancy, which means you can expect a very good growth from AWFIS in FY26 as well. And the next company is your EFC. Sales, EBITDA, although net profit is not showing the right picture because of the taxation part, but sales and EBITDA fantastic, trading at a P of 29. Again, worth keeping a close eye. Like I said, I've discussed both these companies recently a few months ago, so worth watching this company very closely. Moving on to the sixth sector that has posted fantastic number, and it's your value fashion retail. Within this, the first company is V2 Retail. That's posted sales of 68%, EBITDA 84%, net profit 79%. And if you look at the guidance also, management is giving a very good guidance where, you know, they're trying to target growth of around 50 to 60% over the long term. Having said this, the only catch is that management saying that one of the only challenge they have today is in terms of poor execution. If they are not able to execute their growth, otherwise they're saying there's immense growth opportunity and the addressable market for them is massive, right? So overall, this sector is also looking very interesting. And the second company in the space with fantastic number is V-Mart. That has posted 17% sales growth, but EBITDA and net profit have grown at a very fast rate. Again, you can't look at the PE ratio because in retail sector, these companies have invested heavily. So that return would be seen over the period of time. Because here the new stores that they are opening, obviously it will take time for them to mature and generate business. Again, this sector I have already discussed it in detail. Now that's it from this video, part 1. If I just quickly summarize, in electronic sector, you have companies like Dixon, Keynes, Avalon, PG Electroplast. Within affordable housing finance, you have got India Shelter, Home First. Within tech-based sector, you have got Ceinsys, MapMyIndia, Zaggle, Netweb. Then pharma stocks include your Army or Electrolast. Then Laurus Lab. Then co-working space include EFC and AWFIS. And fashion value stocks include V2, Retail and V-Mart. So this is the part 1 of this video. Like I said, you need to deep dive further, but I'm sure this will give you a good direction in terms of where to study, what to study, right? So if you find this video helpful, let me know in the comments, and maybe if you want me to discuss any company in detail again, I can do it, so let me know that as well. In the next part, we'll discuss few more companies that I've identified with fantastic number, so stay tuned.